everybody. I'm Mike Bowers, and I want to welcome you to this month's edition of Small Business Breakthroughs. We bring in experts in working with small businesses on a variety of different topics each month, and we kind of talk to them, get their thoughts on various pieces and parts that they feel, based on their experience and what they do, will help the small business owner. And today we have Dwayne Lee from Telhio Credit Union, and I guarantee that he'll do a lot of great information will come out of this session for you. Before we jump in with Dwayne, I want to introduce Chaz Frutel. Chaz is the director of the Dublin Entrepreneurial Center, and obviously we do this session in conjunction with the deck. I am sitting in the deck today, and we are very happy to be able to continue to work with the deck, and we're looking forward to some really cool things that we're working on for 2023. So, Chaz, you want to say a few words?
Well, thank you so much, Mike. I appreciate the opportunity always to partner up with Small Business Development Center and your team there at Columbus State Community College, because boy, back since 2009, we've been doing some great things with you over that period of time. The deck's graduated over 180 businesses, with over 90% of them still in business. Great statistic. And just a lot of great events and one-on-ones, and brought a lot of people to some successful businesses over the years, and just so really appreciate the opportunity to be working with you guys ongoing. But anybody that's interested in stopping by the deck for a visit, or wanting to maybe look at some space that we might have available, we're always willing to do so. So please give me a call or an email, and I'll post those if anybody might be interested. But again, thank you. Look forward to hearing what Dwayne has to share today.
Great, thanks a lot. And like I say every month, while this is a entrepreneurial center and we do have space here, there's a variety of different spaces available. So all the way from kind of the virtual tenant to, a larger kind of walled window office. So there's a variety of different options there. And like I always say, the thing that I like about the deck and some of the other organizations we work with, it's really this kind of community that gets built. It's kind of connecting with other entrepreneurs, other small business owners, and just in connecting in the cafe or something like that. I think there's a value to those types of things, and being able to do that. So I would highly encourage you to, if you are interested, learning more about the deck and the things that go on here, reach out to Chaz, because he'll be able to share some information with you, and maybe it's something that you would be interested in. So I would encourage you to do that. Couple of promotional things for those that are on with us live today. We will be having the next Small Business Breakthrough, and Bruce, make sure that I say December 15th, because I've been saying the wrong date like every time, but December 15th, 11:30, we will have Chad Willett, who is a tenant here at the deck, but he's also an author, and he's actually a actor. So when I say that we'll have a star of stage and screen on with us, we actually will. And he's the author of 2 different books. I'm going to share screen here, 2 different books, and we'll be talking about the books and the things that Chad has kind of developed over time to allow you to move your career, business forward. And I think it's going to be a really great session. So I would highly encourage you to check that one out. And we will also be having a special session of Small Business Breakthroughs at the Capital Crash Course on December 9th. Now, that session will not be live. We will be recording it, but the Capital Crash Course is an annual event that we do with the SBDC around funding, and Dwayne's been involved in it a number of times, and We have a variety of different sessions. It's free to attend. We do have lunch. Bruce has assured us that the lunches will be great because I think he's cooking them at home and going to bring them in. And it's a great session. But I'd encourage you, if you are interested in jumping on, I would get in this week and get registered, because we'll have over 200 people there, and it'll be really a great experience and great networking and great information about funding your business. So I'd encourage you to take a look at that. I think everything's in the chat. So let's go ahead and get started. We've got our esteemed guest, Dwayne Lee. Dwayne is, I've known Dwayne for a number of years. What I've always liked about Dwayne is that obviously he's been involved in banking and funding and different things of that nature. But, while it's important that you do the bank part, he works with the entrepreneur. He works with that small business owner to help them understand the process and get them a comfort level in working their application through. So again, this is going to be a great session, and I've been wanting to have Dwayne on here. Dwayne, if you watched these before, back in the summer, I think Dwayne jumped in on a couple of them, and I always tried to bring him in to say a few words. So we're excited to have you on, Dwayne, and appreciate your time today.
Thank you. Definitely an honor. And like Mike said, we've been doing these for a long time. Being that we're both right now at the age of 17, just starting to enjoy life and getting younger and younger every day. Just look forward to new opportunities for our new businesses starting, right?
Absolutely. So you want to share a little bit about, kind of your background, kind of the things that you do, and you are working at Telhio Credit Union here in Columbus, and we've found Telhio. I mean, we've been working with Telhio for a long time, even before you joined them. But I think that is one of the organizations that we have done some of the most funding with, definitely over the last year and a half.
Yes, Telhio has a lot of opportunities for small businesses to grow. They definitely are I guess what I like, let me back up. One of the things I like the most about Telhio is you're not a client, you're not a borrower, you're a member, and just like it sounds, member, you're part of a family then, as opposed to you just have a relationship with the banker. So you get calls, you get follow-ups and things like that, so that you continue to be part of this incredible family here at Telhio. So in making decisions where you decide to open up your business and to create a relationship, it's important that you get to know who you're creating that relationship with. And Telhio does a great job in providing that opportunity for their consumer as well as for the small business.
Yeah, absolutely. Like I said, I've been a big fan of Telhio for a number of years. So while we're doing this, let's kind of jump in here, and maybe you can kind of share a little bit, because you've worked at different types of institutions in the past. And I think sometimes people get confused. What do you see as kind of the difference? As I'm a small business owner, and maybe I'm looking to create a depository relationship, or, maybe I'm looking for financing or something like that. I mean, what do you see as the key differences between like banks and credit unions, and maybe these community banks versus the bigger banks, and and even the alternative lenders? What would you say to small businesses that are just kind of trying to navigate this?
Well, I think for a small business trying to navigate which relationship they want to start, it's important, first of all, to get to know who you're working with. A lot of people don't realize if they're a big bank, small bank, because the small bank may still carry their name, but the presiding bank may be a larger bank, for instance, and they roll up to that bank. So a lot of times they don't know who they're banking with, because they are banking with an individual, which can be good because you want to establish a relationship. You don't want just your banking anywhere, right? I think it's important as banks and credit unions come out, that the differences between the two. Banks are, as I mentioned, more client based, more regulated than credit unions are. Credit unions are regulated by its members, as opposed to banks are regulated by who they appoint.
Mhm. Right.
Which is a big difference when it comes to lending products and fees, things like that, which either can help a small business, as we know, or take the small business to where they don't exist anymore.
Right. So as far as credit unions, now my experience working with credit unions, that you have, not all credit unions do business lending. They're not really
Correct.
all business. And some of them that might say they do business lending do, but they're not doing it. They kind of outsource it. So I know
Yeah.
Telhio's got an in-house team.
Yes.
But if somebody's saying, okay, well, I heard Dwayne, and I've got a branch for X credit union by my house, I'm going to go check it out, and then they get there and they may not be the same thing that you're talking about with Telhio. Would that be accurate?
Yes. So they all worked a little differently. So some have uh, business lending authority, where they can actually make the business loans, and some have consumer authority. The ones that may operate on the consumer side will have relationships with other credit unions where they can still do the business loan, but it will be maybe in cooperation with another credit union.
Right, right. And when we think about credit unions, I mean, what's your experience with that? So with Telhio, I mean, credit unions, you talk about membership, right? So, there, at least there was, and I don't know how tight this is now. There was a geographic restriction, or you had to work in the county, or you had to live in the county, or something like that. I mean, what do you see in the industry with that now?
Well, I think it's still pretty much the same, but I think it's now a little more open scope, where you may have a relationship with someone that at a credit union. It may be your aunt that maybe works at the credit union, or maybe through her job is related with the credit union and deposits and stuff like that. So
Right.
access to the credit union is definitely available. It's just a matter of, it goes back to that one piece, that sitting down and creating that relationship, so people get to know who you are and how they can help you.
Yeah. Yeah.
That's always the key.
Right. So, like, for example, I live in Union County. There's no Telhio in Union County that I'm aware of, but I work in
Yeah.
Franklin County, so I'm good.
Right.
I wanted to bank with Telhio, or credit union that's based here or something like that.
Absolutely. And there's some other scenarios. I mean, I've ran across one where a lady's brother works in Union County, as an example, and she brought him in through the relationship with her banker, and she's actually a member of the credit union.
Okay. Okay. That's
So
good.
there's different scenarios that work in favor of the new member coming to the credit union.
Good. Good. Well, I wanted to make sure we kind of covered that, because I wanted people not to think, well, somebody said that I had to live in Columbus to to go to this credit union. I mean, that's not necessarily
No,
the case. There's a variety of options. And I think if you find someplace you're comfortable with, just go talk to them. And if there's a way to work it, then they'll certainly do that.
absolutely. Absolutely.
Yeah. So let's kind of jump in here, because, with your expertise here. So for the small business owners that are on here, one thing just want to mention too, if you have questions for Dwayne, feel free to drop them in the chat, and we'll jump on those, make sure that we ask that. But I have a set of questions here. So as a small business owner, Dwayne, I'm just start with the kind of the startup person. So I'm starting the business here. at what point should I really start to build this relationship with a bank or a credit union? And what should that kind of look like to get things rolling?
Well, I think you should probably start immediately, because you may not open your business doors today, but to have that relationship started to help you get to where you can open your doors, you want to be able to be in a relationship, start that conversation so that you can be guided in the right path. Um, I believe what's happening now, and my personal belief is a lot of people are running into what they consider people that will help them, when in fact they're probably hurting them more than anything else, because they're directing them in the wrong places. They're telling them to start this and start this, but you really need to go through, a stronger agency like the SBDC to help you establish and learn how your business can operate. What the operating agreement is, how to formulate what your business is. So is it going to be an LLC? Is it going to be a sole prop? And what happens is, at tax filing time and even during a year, because you've established all these entities or your business set up incorrectly, it costs you more and could cost you to go out of business. So it's important that you get the right guidance. And bank or credit union, you need to have, 3 people on your side, which is your attorney that you trust and believe in. But you also need to get wise counsel from, the business entity or someone in their field that can guide you the right way. The SBDC provides all that. So I would definitely encourage you to dig deeper into some of the options that the SBDC have available for you.
Right. Well, thank you. I agree. I mean, I think when I think about risk, everybody talks about, well, if you're going to start a business, it's going to be risky or something. Obviously there's risk. There's risk in anything you do.
Absolutely.
But I always got to look at, as a small business owner, the risk is created by you not knowing what you're doing. And
Correct.
there's really no reason for you not to know what you're doing, because there's all kinds of partners like the SBDC, like the deck, other entities that, are experts in this, or entrepreneurs, could be mentors or something like that. It's just, it's incumbent on the business owner to kind of reach out and go find these sources. And the great thing about being in Central Ohio is that I honestly think that Central Ohio is probably one of the stronger small business ecosystems in terms of support for entrepreneurs.
Yes.
Definitely.
Yes.
Mm-hmm.
Yes, I agree.
Yeah. So let's say that, okay, we get the business up, we're running, and we need funding. So one, how would you recommend the entrepreneur, think about funding? Because I get a lot of people, they're like, well, I think I need $20,000 or I need $50,000. Well, okay, what do you need it for? And they really can't articulate that. So, what are your thoughts around that? And maybe that kind of leads us to a couple of questions we had in the registration site, where again, trying to determine startup capital needs, different things like that. And, and starting to create this, at least have a mindset of a sources and uses of funds type concept.
Right. Well, I think the first and most important piece is you got to have that trusted advisor. Again, going back to the SBDC, someone who can sit down with you, as well as Chad over at the deck, someone to sit down with you and explain what working capital is. You have to understand what it is you're applying for. Working capital, short term, long term working capital, and even equipment finance. You have to understand, what's your mission statement that you plan to do for your business. I mean, your business plan is the key part which helps you to stay in business, because every day you should look back at your business plan to start what your next day is going to be like. And I think a lot of times small businesses get away from that because they get, complacent, comfortable, they're growing. But as a startup small business, I think you have to stay in that business plan even more so that you stay focused on where you're starting. Because when it comes to working capital, it's easy to go through that working capital, pension money here, there for personal needs and, for little small stuff that you think would be nice for your business. But you've got to stay focused on the end goal, which is selling your product or selling your service that you provide in order to gain more residual income coming back in.
Right. So if an individual, let's say they've been in business for a little while, haven't done funding or financing, and again, what I've seen people, they come to me and they say, we went to the bank, but, I talked to them, they didn't seem that interested, or maybe they're not interested in early stage businesses, or they're not interested in this kind of business or something like that. And then that's when I ask them, okay, well, you have a plan or something like this. And what they've done is that they've gone in and it's basically, they've talked to a banker, or maybe they've gone to a branch and they end up with a personal banker or something like that, which is not a problem, but they don't know enough about their business to actually have this conversation. And then they get frustrated and they blame the bank.
Yeah, that's never happened before, Mike. I don't know why that scenario's coming up. I think sometimes it's just patience. Patience and understanding that, the way people receive information is completely different from person to person. What you and I may call working capital, somebody else may call, I just see cash flow. And cash flow is not the same as working capital. Right. So a lot of times those small businesses use the wrong wording and get dollars and don't understand how to use those dollars. So the emphasis becomes, okay, I received $10,000 in financing, but I'm not quite sure where to use it or how. They're asking me to pledge my house. Why should I pledge my house as collateral for it? What is collateral? Questions like that are what classes that you and Chaz offer. I think it all comes back to the education of the small business owner.
Right.
I mean, you can get $500,000 and then 12 months, see another 500,000 because you used the first 500,000 incorrectly. And you're still in the same position, but now you owe $1 million.
Yeah.
You have to learn how to use those dollars as well as get them.
So when you're thinking about funding, so whatever that happens to be. So I mean, if we're talking about working capital or something like that, I mean, to your point, obviously, I mentioned a source and use concept. So again, this issue of, okay, I've got $500,000 and there should be some sort of use defined.
Right.
What right. Doing with that. But if for the small business owner, how do they start again, SBDC and, we can do this, but I mean, just for purposes of today, I mean, how would you recommend they start to formulate in their mind, this is what I need this is what kind of funding I need, and this is how I be thinking about it?
Well, I would say, first of all, you have to really evaluate if you want to be a small business owner, because once you get in, you can't be 50-50 because you'll never grow. Your business will only be half of what it could be. So you have to evaluate the time and the risk that you're going to be involved in the small business, because it is a commitment. And a lot of times small business owners invest, invest without taking salaries and stuff like that. I don't usually recommend that. I usually recommend that, you pay yourself a salary, even at startup, even if it's something small, because you have to have an incentive to get out of the bed every day as well to keep going. I believe a lot of small business owners start their day thinking about how to sell their product. And I think there's nothing wrong with that, but I think it's also something where you have to look at the marketing side of your product to see if it's a product that isn't really in need right now. If you don't have a demand for the product, just because you make a good product and somebody else makes it and theirs is cheaper and yours is higher, you have to evaluate that to see if it's something that's going to be competitive in the market. I think a lot of times that small business owners, don't understand that they are an investor in their own business as well. I mean, they have to invest their dollars. They want to have an idea and come to bank or credit union and say, hey, I got this idea. Here's my business plan. I just paid $3,000 for somebody to write for me. It's a great business plan, but there's no equity injection from the small business owner, and banks, credit unions, whoever it may be, is going to look for that. And one of the biggest mistakes that we've all seen is most small business owners want to start out with buying their own building and haven't really earned a dollar yet. So I discourage that right off the bat, because you don't know what you're going to make. You don't know how things are going to go. And yeah, you're taking a leap of faith and starting your own business, but you must use wisdom. You don't want to start out and buy $1 million building right now and your company's not earning any cash flow.
That's a great point. And again, I think that it's when you're getting financing to do something that's going to build the business. So I always think about this kind of return on that investment. And if you're going to buy $1 million building, what is the return for that? I mean, is that going to, is that going to do something such that you can create the return so that you can make the payments and have additional money? Because everybody, I think, gets confused there too, is that, I have to be able to pay the loan back. True. But, there should be additional money for the business and for you.
Yeah. I once heard when I was in college, I had a teacher at Columbus State, actually, who, I ain't kidding, I think everybody in the class thought they were going to fail because he was so tough on us. But he explained something about, how people, when you have a business and how much you spend personally, it was a personal finance class, and he was breaking down, people come out and they say, well, I'm going to spend 25% here, 35% here, 65% here. Those are great numbers. Numbers are always good when you can equate a percentage and to what you're going to spend and how much is going to be cash flow. But until you're actually in it and see the day to day, that's where you really, as they say, the rubber meets the road. And you could look at, okay, I said I was going to spend 25% on my home expenses and be able to contribute another 25 towards the business. Well, my daughter had volleyball. That was $5,000 I didn't plan on. Well, now that comes out of the business expense. Right. So it's important to sit down and get the planning piece down.
Right. And that's a great point too, because I think a lot of times people get into this is what I need for the business part. Mm-hmm. But then they forget about, okay, yeah, I've got other expenses personally that I got to pay for, and different things pop up. I mean, over Thanksgiving weekend, we had a new sewer line put in. So that's my Christmas present to my wife. But, that was expensive investment
right
into our property. And, if you're an entrepreneur, you can have a good business, and that business could be cooking along, but all of a sudden you get a several $1,000s thing pop up at the house. You got to figure out how that's going to get paid.
Well, let's look at the pandemic. Like when the pandemic hit, everybody stayed home. How many businesses went through a cycle of where I don't even have customers coming in the door, but yet I'm open?
Yeah.
So it's important, especially as a startup, that you have, let's say, versatility. You're flexible. I don't think I've ever seen so many places that did takeout. I mean, I never thought it'd be a day where you have takeout alcohol in a cup.
Yeah.
You know, so that's what's changing with the pandemic, and who knows what the new changes are going to be? Because every time there's something that happens, there's always going to be a reaction, right?
Right.
So what's the reaction now? We've got small businesses trying to do more and more to accommodate the customers.
Yeah.
We don't know.
Right. Right. One thing that I saw with the pandemic is that, I think I always harken back to March 16th, because that was the first day, the last day that we as an SBDC were all in the office together. And then, 2 days later, it was like, going home. And then there was a lot of these kind of public support things. So you had your EIDL loans from the SBA. You ended up having the PPP loan from the SBA. But, here in Columbus, we also had a recovery grant program that, we were involved in, and Rev One Ventures was involved in. The city and the county, helped fund, to support small businesses. And what we saw was that these businesses weren't prepared to deal with that from a financial standpoint. They didn't have their taxes. They didn't understand their numbers. They didn't know anything here. So you've got, for that grant program and for all of these things, they tried to simplify it as much as possible, but you got to have a little bit of information here. And, that was to me was an awakening that, a lot of these businesses just weren't prepared. And, what's been your experience, or what do you see from some of these businesses in terms of the owner and maybe not understanding the numbers, or, not pursuing the numbers, or putting it on the back burner because, hey, I'm selling or I'm doing something else?
Yeah, I think one of the biggest things I'm seeing right now is a lot of people are hoping that things come back to where they were, and they're not.
Right.
It's a completely different economy. So even the businesses that were in place and ticking along are not ticking along anymore, just due to what's happened in the past.
Yeah.
More people are unemployed, which means less people are eating out, spending what we would call free money that they have, disposable cash flow. So it makes it a lot harder for businesses that are restaurants. I was trying to think of the place my daughter went the other day, and she called me when she got there. She's telling me that it's over in the east and here in Columbus, but she said usually it's a line to get in the place. And she said, "Dad, I got out the car and I walk right in."
Yeah. Yeah.
I mean, it's just a different way now. And then with the online, the way people are ordering online, nobody wants to go in the stores anymore. So all that's really impacting the small business owner, your goods and services, how you bring them to the consumer. That's important now because, Amazon has hit everywhere in the country and made life so nice where a package is just delivered to your front step. You don't have to leave the house.
Right.
So more and more people have become, as my wife says, home hermits, because they don't have to leave the house anymore. They can sit at home and order food and it's delivered. They can order groceries and it's delivered. They don't even have the need for a car anymore. But I think it's important that we get back to being able to network in business, because businesses need networking in order to survive. Networking is what makes those businesses connect with individuals that need their services, where both of them can grow and become very big together.
Yeah.
And I think the pandemic has kind of changed a lot of that, so that more and more businesses are independent And those businesses that are independent are now seeing a lot of change in cash flow, and as well as workers, because that's the other thing we're experiencing now too, is the workforce is changing. Um, I don't know where people are getting their money from, but people are complacent when not going to work anymore right now,
Right. Right. The
which is a
thing,
whole nother set of.
yeah. Well, I think the thing that I see now in, late 2022 going into 2023 is that these business owners, they have to be really going back and taking a look at their numbers and looking at making their future projections, because
Yeah.
I mean, the economy has changed, but you also have, some inflationary pressures pushing the prices up. And now you've got the Fed trying to tamp that down. And by tamping it down, they're also tamping down potentially the economy. So
Right.
things could slow down. So
Right.
you got a rise in prices and a slowdown in the economy that I think it's important for businesses to take into account.
And I think it's just a switch in a guard right now that we're not prepared for. I mean, the pandemic, it wasn't planned. It caught everybody off guard. I think that the entire country is really in a rebound mode to try to survive until we can level out, per se. And I think one of the strongest points that I saw, my wife and I went out to dinner, and they only had 2 servers for the whole restaurant.
Right.
So people have gotten more complacent too in their personal growth.
Right.
But then also it's forcing other places. I mean, I've never known some restaurants to close at 8 o'clock.
Right.
And that's what it's doing. The economy, the prices, the lack of employment. It's all in a big ball,
Yeah.
And people are trying to survive. And small business, of course, is what brings us back. So we have to continue to support small businesses, because I think that's going to be the way that we get out of this.
Absolutely. Absolutely. And I want to make one point that's really important. I realize that, staffing's down, and I know some of these restaurants are having challenges, but that's not an excuse for you to not take me to breakfast like you promised in 2017. So I'm still waiting on that.
I got you, Mike. I got
Okay.
you.
All right. Hey, I want to shift gears real quick. We got a little bit of time left, but I want to talk about the process. So somebody comes to you, and you're talking to them, and they need to get funding. What happens from there? So, I mean, assuming you guys have an application, I know you do have an application, some sort of plan, some projections and things like that come to you potentially. What happens to it from there? So I know it goes to, there's underwriters, and I know at Telhio, there's review committees at certain levels and different things like that. So as the owner, what should they think about is happening with their application behind the scenes, that why they're waiting to hear a yes or no?
So it's important to mention a couple of things and during the application process. So at the beginning, when you meet with our team, you'll get an email that says, this is the information that we need. And it'll be an application attached. It'll be a business debt service schedule. It'll be 3 years of tax returns, business, personal, depending on where you're at in your life cycle of your business. We're going to ask for all that, and a personal financial statement. And it's important as a business owner that if you don't understand any of the stuff that we're asking for, that you speak up.
Yeah. Okay.
Don't stay quiet, because then that slows down the process. So, and what we want to do, time is always the essence of money. So we want to get this back to you completed as quickly as possible. So if you don't understand what a personal financial statement is, business debt schedule, contact your relationship manager immediately. Second of all, the more the complete package gets the attention. So I got a package from Mike, and I got a package from Chaz. Chaz's package is complete. He's got everything in there I asked for. I'm going to probably jump on Chaz's package first because he's got everything I need. I can keep it moving and get it to the finish line. Because the ultimate goal is to get it to that review committee so they can look at it so we can get dollars out. Doesn't
Right.
do us any good to have a ton of packages just waiting on a decision because nobody's benefiting at that point.
Right.
And I think that's the whole key. It's just the complete package. It's important even if they don't want to come here and want to talk to you two, Chaz and Mike, it's important that they still have that conversation.
Yeah, absolutely. I mean, we get a lot of folks that come in and they're, we start helping put the package together, but we'll start asking for stuff and then they just go dark and then we're like, what's going on? Or else they'll want to come back in and they haven't done any of the stuff to get it ready
Yeah.
yet.
Yeah. It's that fear factor, right? Everybody's afraid to, and it's probably more now, Mike. I met with a lady a couple weeks ago at my church, and she had a fear of, or not a fear, an anxiety that has developed from the pandemic to where she's afraid to tell people what she doesn't know.
Okay.
And as bankers, as people in the financial field, we expect for you not to know, right?
Right.
So it makes it hard to get a package when you've got some people that are afraid to even open it up for discussion.
Yeah. So somebody brings you a complete package. You guys are pretty comfortable with it. Now I'm going to ask you for two different scenarios. So one at Telhio. So what happens with it from there? I know it goes to underwriters, and what does that mean?
Underwriters, couple days. We try to get it to them. That way they can package it, get it to committee, and week, 2 weeks,
What
try
is
to get a decision.
For the folks that are here? What is an underwriter? What's their role?
So the underwriter role reviews the credit of the borrower and the guarantor to come out with a decision of approval or decline. And
Okay.
their goal is basically to, if it's an approval, to provide us with what we need to close. If it's for working capital, we'll need a UCC filing. If it's to purchase equipment, we'll need a specific lien filing, things like that. Or if it's missing information, or if the cash flows off, maybe we can't do 250, but maybe we could do 175 to fit within the cash flow ratios that the banks are looking for.
Yeah.
That's their role.
Okay. And at Telhio, are you interacting with the underwriter? Or if they have questions, are they coming back to you, or what's going on there?
It depends on the scenario.
Okay.
Yeah, a lot of different scenarios come into play here.
Okay. So let's think about another thing. So you've worked at larger banks and stuff like that. So what typically is the process there? They come in and they meet with a lender, have a similar kind of conversation probably that they would have with you at Telhio. What happens with the application from there typically at these bigger institutions that maybe have the branch, but maybe they're based in whatever, Cleveland or Chicago or whatever?
So the individual that would probably be like, so say me back in my previous position, I would package the deal,
Okay.
send it off to what we call our underwriting center. And in that underwriting center, within 3 to 4 days, you would get a decision. Now, sometimes you wouldn't get you get a decision, but you wouldn't get any options where they may say, we can't do 150, but we'll do 75. They'll make you submit for another request because time is very important for them.
Right.
So they're on a time schedule in the bigger shops where production is key, where they're looking at anywhere from, I'd say, 3 to 5 deals a day. And it just keeps coming. So let's say you're backed up and you couldn't get the other 3 out the other day. Well, you still got maybe another 3 to 5 coming that same day.
Yeah.
Whereas here, it's a smaller shop. So you have more maneuverability, I guess is the right word, more
Yeah. So, you've made you made the same point a couple of times, and I think this is interesting. So somebody comes in and they need $100,000. And let's say it's completely justified, source and use, the whole 9 yards, and it all makes sense. However, that doesn't mean just because it makes sense that the bank's going to be able to do it, because again of the cash flow issues. So they may come back. So that is something they're going to be considering. So as an entrepreneur, as a small business owner, you need to be saying, I need $100,000 and I've got to make sure that it'll cash flow so that they'll be willing to do this, because, my experience, again, what the bank's looking for is they want to get paid back.
Right. I mean, there's three sources that they look for, right? For repayment, the business cash flow, the liquidation of collateral, or the tertiary source, which secondary source of repayment, which would be you, and then the liquidation of collateral. So as you go through those sources, there's less and less chances. When you get down to liquidation of collateral is only going to be at a percentage of what the value is. So those are usually dire straight times, right?
Yeah.
But when you're in your conversation with your banker, with your relationship manager, they should be going through, okay, you've got a home that's $250,000, you only owe $60,000 on it. Have you thought about maybe injecting more equity into the opportunity, or even providing some more cash, so where you pay for it instead of borrowing that money, you paying out of pocket for it, and you can pay yourself back at a later date. I mean, those are all options that, as the business owner, you need to consider to help fund your business.
Right.
I mean, you don't want to lean on the bank to fund 100% of your business, because you want to own your company, not the bank.
Right. So talk briefly again for the folks that are here and watching, about the role of the SBA. So I think sometimes people get confused that they just think, oh, well, the SBA is coming in, so even if I got a bad deal, they'll do it. It's not the case. And what's interesting to me, now I haven't seen this since post-pandemic, I would still get people coming into me saying that they understood that they had to be turned down for a loan to be able to get an SBA loan. Now that's like a 70s, 80s thing, right?
Yeah. The SBA is not a bank. It's important to mention that. They provide a guarantee to the bank. The SBA does not make a bad deal good. It doesn't make a good deal better.
Yeah.
The SBA is there to mitigate a shortfall within the business that the bank or whatever financial institution may be uncomfortable with. They do require, that if you have a home or if you have collateral available, that it is considered for the opportunity of funding your loan. They do require a fee for financing, and I want to say it's 3.5%. And they do help get loans over the finish line, because they are providing a guarantee up to sometimes 90%. They'll start at 50 and go all the way up to 90s, 50, 90, 50, 75, and 90. And there's a host of programs. Each program has its own different fee. There are some programs that are set up just for real estate and equipment. That program is known as an SBA CD 504. The other programs are known as an SBA 7A. And there's a couple of things that are really important to know when you're working with a bank or a credit union. You need to know if they are a PLP, which is preferred lender, or if they are a CLP, where they are not a preferred lender and they have to package the loan and send it to the SBA. Those that are preferred literally can make the decision in-house. Those that are not preferred have to wait for a decision to come back.
Okay. And, I mean, my experience, especially the ones that are preferred, if everything's together and everything's done, packaged right, getting an SBA guarantee is not a significant delay.
It's really not. They have really over time, it's just gotten better and better, right? I mean, they've streamlined some processes, improved some, but then on others, they've just realized that, hey, this can be a better experience for everybody if we did it this way.
Absolutely. Okay. So I want to kind of start wrapping up here, but I do want to ask your opinion. I know you've never seen this in your career because all of your loans have all been gold plated and they've all paid and maybe even give me extra money just for the heck of it. Let's say that, they get the loan, things are cooking along, something goes wrong, and they start having trouble making payments. They start to get behind. What do you tell people to do there? I think unfortunately a lot of people just, again, go dark and just, I'll figure it out. And then they get themselves in a hole.
When I first got married, I remember the marriage counselor saying, communication, communication, communication. That is the same way with a business. It's communication, communication, communication. If you're having issues, it's important that you communicate, be transparent, and just talk to us. It's nothing like giving somebody $1 million or even $100,000 and you call them and, you're asking for financials, for instance, and they don't call you back.
Okay.
No response. They go dark. Going dark is the worst thing you can do when you owe somebody money, right? I mean, because that it not only makes you look bad, but it starts to give them the impression of making their mind wander. I had a scenario where when I was lending, I had a guy I loaned some money to for about $150,000, and I called him, never responded. I actually passed him one day, so I turned around because I had an idea where he was going, and he was there. And he said, "Well, I sold all my equipment and closed the business." I said, "I know that. No, but why wouldn't you have called me back and tell me what was going on?" And he said, "I just didn't know what to say." I said, "Well, communication, communication, communication." Now, this was a good turnout because he sold his business. He'd owned the real estate and he only had probably $100,000 invested in the real estate. Well, after our conversation, I said, "Well, what are you going to do with the building?" He said, "Well, it's just sitting empty now." He sold the building for $825,000.
All right.
So this was a great situation that he came into because I was able to introduce the buyer of the building to him. But that's where relationship comes into play along with communication. Because if you don't communicate, the relationship can't go anywhere.
Yeah, absolutely. And, I think that's a good point too, because again, I think sometimes I see people that, well, I have collateral, I've got whatever. They don't typically know what collateral is. It's not, they don't really want your car. They don't want
Right.
picks and shovels out of your shed or anything. But if somebody has equipment or they have receipt or inventory, if things start to go bad, they're going to start spending that. So even if they're collateralized with, UCCs on inventory or, equipment or something like that, if you don't work through this process, if things go bad, if the bank has to foreclose and sue you or whatever and come try to collect this stuff, for the bank, all that stuff's gone.
Yeah. It's all gone.
Yeah.
There's nothing there by the time they get there. I mean, in most cases, they've already shut down the business and are working now at Starbucks, right?
Right. Mm-hmm. Yeah. So yeah, I mean, definitely. I mean, don't be, I would say reach out to your bank, have some conversations there. You can come and talk to us too. I mean, we'll help you kind of think through scenarios and options and different things. Because I think sometimes people get into a mode of, I'm in a jam and I have to have $100,000 or I'll never get out of this. Well, if you go talk to somebody else, they may say, you don't really need 100,000 to get out of this if you just were able to do this. Or that's
Right.
somehow. So not to put you in a deeper hole, let's restructure so you can actually dig your way out of this thing.
And I think it's important to mention, I don't know about Chaz, but I know Mike over at Columbus State, it's free.
Yeah.
It's
Yeah.
free. It's what you guys do. I mean, you have probably one of the largest resources of information for small businesses in Central Ohio, right?
Yeah, absolutely.
So it's free for me to learn how to make my business grow and become profitable.
Yeah. What I would say though, too, is that if you do come to see us, you go to see, have a conversation with Chaz or any of these other resources, you need to be open for the alternatives. Don't come in and say, well, I think I need $100,000. And if I tell you, well, you're not going to get $100,000, but we could do this, then you say, yeah, I don't care. I'm leaving.
Right.
Things like that. I mean,
Right.
that's not going to help you. I mean, you need to be open, for this. And, that's one of the things, like, my son plays baseball, and he's been in the recruiting game, to go play baseball in college. And, I mean, I know that that's one of the things the coaches are looking for. They could have to be a superstar. Are you coachable?
Right.
You take what I tell you and get better. And it's the same thing, I think, for individuals, that they need to be open for other alternatives. Because again, sometimes you don't see the forest for the trees.
And I think that starts actually, I'm sitting here thinking that's continues on from probably youth, because I coached youth basketball for many years, and only thing they want to do is shoot to be next Stephen Curry. When I'm saying you need to probably practice on just making layups.
Yeah, right. Yeah, and I know Chaz would probably concur on that, 'cause Chaz is a longtime soccer coach too. So, being open, listen to the folks they're there to help you get better, or in
Right.
business, help your business to get better. Be willing to kind of work with that. All right, so I got one more question, and then we're going to wrap up. Before I do that, I do want to thank Chaz and the Dublin Entrepreneurial Center for their partnership on this. And we look forward to getting one more of these in December, on December 15th. And we are looking forward to some of the things we're talking about doing maybe in 2023 too. So again, Chaz, thank you for your partnership here. And Dwayne, my last question really is that if I'm a business owner and I'm thinking about getting funding, I've kind of tinkered around a little bit with this. What's one thing that you should really think about maybe doing today to kind of get you on the road to getting your package together, or understanding the process? What would you say? Go do this next, even though you don't know what they've done past. But I mean, kind of what would you say a great step for them?
Truthfully, I would say the first thing is not to go meet with the bank. I would say probably to go meet with Columbus State, or even a Dublin Entrepreneur Center, because the resources that are available, not just on the individual business, but the step-by-step as to how the process works, you guys are aware of. So you're not shocked when you go to the bank and they ask for a bunch of information. It just saves time. If you can come prepared to meet the banker and you've already sat down with Mike or Chaz, and they've already said, well, yeah, you need 3 years of business tax returns. You need a business debt schedule. When's the last time you pulled your credit? What's on there? It's nothing like a bank going through all this review, cash flow is great. Then at the end of the day, you find out that, you had a bankruptcy, and after the bankruptcy, you still didn't pay your home mortgage for 12 months on time.
Yeah. Yeah. That's always been one of my favorites. I used to work in banking. So, one of my favorites is always when they come in, my credit's clear. It's clean.
Yeah.
That's because they filed bankruptcy 2 weeks ago. Not clean.
You know, and you know, clear and clean is always in the eyes of the beholder, right?
That's right. That's right. So anyway, so thanks, Dwayne. I appreciate you jumping on here. Like I said, I mean, I've wanted to have you be on this for a while. I'm glad we were able to work it out today. Look forward to maybe getting you on again, 23 sometime, and kind of looking at doing some things. And again, I want to wish you best of luck going forward. And I hope you have a great holiday.
Thank you. Thank you. You guys do the same.
Okay, great. So thanks to everyone. Chaz, appreciate your partnership as usual. And we are looking forward to moving into December and making some good progress and getting everybody ready, and then hitting the ground running in 2023. So thanks for everybody for joining us, and we look forward to seeing you again at the next Small Business Breakthroughs. Thank you.